Hey everyone, welcome back to the channel. As a real estate agent, I've had the privilege of guiding countless buyers through the home buying process. Along the way, I've picked up some valuable lessons and insights that can make a huge difference when you're ready to purchase a home. In today's video, I want to share some of the most important things you should know before buying a house. Tips that will help you avoid mistakes, save money, and ensure you're making the best decision for your future. The belief that buyers must put down 20% as a down payment is a common misconception. I was surprised to learn that 35% of consumers believe they need a down payment of 16% to 20% of the purchase price, and that 10% believe they need more than 20% of a down payment to purchase a home, according to a 2020 survey from the National Association of Realtors. In reality, there are many loan options that require significantly less. For instance, conventional loans often allow for down payments as low as 3%, while FHA loans can require as little as 3.5%. Additionally, certain government-backed loans like USDA loans and VA loans offer 0% down payment options for qualified buyers. However, when you put down less than 20%, most lenders require you to pay for private mortgage insurance, PMI. PMI protects the lender in case you default on the loan and is typically added to your monthly mortgage payment. Once you've paid enough into the mortgage, reaching 20% equity in the home, you can request to have PMI removed. PMI adds to your monthly cost, which can be seen as a downside of putting less money down. One of the main cons of a smaller down payment is the overall cost. A lower down payment means you're borrowing more, which increases the total amount of interest you pay over the life of the loan. You also have less equity starting out, which can make it harder to weather a market downturn. On the other hand, putting down less has some clear benefits. First, it allows buyers to purchase a home sooner, even if they haven't saved a large sum of money. This is especially helpful in markets where home prices are rising. Additionally, keeping more money in savings can be smart for handling unexpected costs after moving in, such as repairs or renovations, or for building an emergency fund. So while a 20% down payment can help you avoid PMI and reduce your overall loan amount, there are many loan options that require less, making homeownership more accessible. The decision depends on your financial situation and long-term goals. You must know that obtaining a mortgage pre-approval is a crucial step when buying a home. Here's a breakdown of what it is, why it's important, and how to get one. A pre-approval is a formal document from a lender that estimates how much they are willing to lend you based on your financial profile. It outlines your loan amount, potential interest rate, and the terms of the mortgage, though it's not a guarantee. A pre-approval typically involves a review of your credit score, income, assets, and debt. Why is it important? It shows you're serious. Sellers see pre-approved buyers as more reliable since they have proof of financing. It helps narrow your budget. You know exactly how much you can borrow so you don't waste time looking at homes outside your price range. It gives you a competitive advantage. In a hot market, having a pre-approval gives you a stronger negotiating position, and it can make your offer stand out in a bidding war. How to get a pre-approval? Gather your financial documents. You'll need recent pay stubs, tax returns, bank statements, and proof of assets. Second, choose a lender. Shop around with different lenders to find the best rates and terms. Thirdly, submit an application. The lender will run a credit check and assess your financial documents. Fourth, receive your pre-approval letter. Once approved, the lender will provide a letter stating the loan amount you qualify for. This step should ideally be done early in the home buying process to ensure you're ready when you find the right property. And while you're having a conversation with your lender, discuss down payment assistance. Thank me later. What exactly are down payment assistance programs? These programs are designed to help home buyers cover the upfront cost of purchasing a home, specifically the down payment, which could be thousands of dollars. For many people, saving up the down payment can be a huge hurdle, but these programs aim to lower that barrier, making home ownership more accessible. Some programs offer assistance in the form of grants, forgivable loans, or low-interest loans, meaning you may not have to pay the money back at all or is offered at favorable terms. Now let's talk about who actually offers down payment assistance. There are thousands of down payment assistance programs available. Thousands. These programs can come from a variety of sources. First, you've got government-backed programs. Both federal and state governments offer down payment assistance, with many states running their own initiatives to help local residents. Next, we have local municipalities and counties. Some cities or towns offer assistance specific to their area, especially if they're trying to boost home ownership in certain communities. Nonprofits and community organizations also often step in to help home buyers, especially for low to moderate income families. And finally, some lenders offer their own assistance programs. When you're shopping for a mortgage, it's worth asking if your lender has any offers for first-time home buyers or specific buyer incentives. Each program has its own eligibility terms and conditions. Many require you to occupy the home as a primary residence, have a low to moderate income, buy with purchase price limits, put up your own money, often $1,000 or 1% of the home's price, buy in a specific geographic location, take home buyer classes, or participate in housing counseling. As mentioned earlier, there are thousands out there. To find out about others and you want more info about the ones described here in this video, you may contact your lender, the program's website, your real estate agent, Google down payment assistance, or contact your local housing authority. Down payment assistance programs can be a game changer, but remember, they're not for everyone. It's important to do your homework and understand the requirements, like income limits or location restrictions. Once you have a pre-approval, you shouldn't make any major purchases. Making major purchases, applying for new credit, failure to make a payment on your credit card, or changing jobs. Huge no-nos when you are pre-approved. And that is because when you are pre-approved, all the way up until closing, the lender is constantly evaluating your credit, your assets, your score, and your income. So any changes in the wrong direction can lead you to not getting that loan. Just because you are pre-approved, you are not guaranteed the loan. You can be denied. So things you should avoid doing while you're going through the home buying process are quitting your job, getting a new job, applying for a new credit card, or closing an existing one. Don't do that. Not paying your bills. Do not transfer large sums of money between your accounts. Do not max out your existing credit cards, and do not buy a car. So when you're thinking about making a change in your finances, ask yourself these questions. Would this increase my debt level, or would this decrease my assets? If the answer is yes, don't do it. Nope. Having a pre-approval is not a guarantee that you will get a mortgage. Also, prior to buying a house, you must consider all of the costs involved in buying a home. Watch this clip about the hidden cost of home ownership. It's tempting to max out what the bank says you can afford, but let's dive into why that might not be the best idea. When you buy a house, the purchase price is just the beginning. There are several other costs to keep in mind, such as repairs and maintenance. Homes need regular upkeep. From fixing a leaky faucet to replacing a roof, these costs add up over time. You will also have property taxes, and depending on where you live, property taxes can be a significant expense. So make sure to factor those into your budget. You'll also have to have homeowners insurance, and this monthly cost needs to be included in your financial planning. There will also be utility bills for electricity, water, and gas. And if your home is part of a HOA, homeowners association, there will be additional fees for things like community maintenance and amenities. It's important that you not feel that you have to purchase a home that is at the maximum amount of your pre-approval, and that is so that you can have some financial flexibility, because buying below your limit gives you some breathing room in your budget, allowing you to handle unexpected expenses or emergencies without being stressed out, and so that you can have money for more important things such as having fun, travel, and savings. So consider the extra cost when buying a home. Let me tell you why you need me, Cynara Anderson, representing you and guiding you through the home buying process. I have extensive knowledge of the local housing market, including current trends, pricing, and neighborhood insights. This expertise can help you find the right home at the right price. I have access to a broader range of listings, including those that may not be publicly advertised. This gives you more options to choose from. I am a skilled negotiator who can help you get the best deal possible. I know how to handle offers and counter offers effectively. The home buying process involves a lot of paperwork and legal requirements. I help ensure that all the documents are correctly completed and submitted, reducing the risk of errors or legal issues. I have a network of professionals such as home inspectors, mortgage brokers, attorneys, and contractors, which can be invaluable during the home buying process. Buying a home can be time-consuming and stressful. I can facilitate many of the tasks involved and ensure deadlines are met, saving you time and reducing stress. I represent your interests throughout the buying process, advocating for you and ensuring your needs and preferences are prioritized. If issues arise during the buying process, I have the experience and resources to address and resolve them efficiently. Overall, working with me can make the home buying process smoother, more efficient, and more successful. In a real estate contract, many elements are negotiable, giving home buyers room to shape the deal in their favor. One of the most important factors is the purchase price. Buyers don't always have to accept the asking price. Instead, they can offer less, especially if the home has been on the market for a while or if the market conditions lean in their favor. This can result in significant savings upfront and reduce monthly mortgage payments, making home ownership more affordable. Closing costs, which include various fees associated with finalizing the purchase, are another area where buyers can negotiate. In some cases, the seller might agree to cover a portion of these costs, which can help reduce the buyer's out-of-pocket expenses when it comes time to close on the home. Additionally, after a home inspection, buyers may find repairs or improvements that are needed. Rather than paying for these themselves, they can negotiate for the seller to either make the repairs or provide credits towards the cost of fixing them. This ensures that the home is in better condition or provides funds to make necessary upgrades after moving in. Another critical point of negotiation is contingencies. Conditions that must be met for the sale to proceed, such as securing financing, getting a satisfactory home inspection, or having the home appraised at or above the purchase price. Buyers can negotiate these terms to ensure they are protected if something goes wrong. For instance, they can negotiate for more time to secure financing or have an extended inspection period, which gives them greater control and protection throughout the process. The closing date itself is also negotiable. While sellers often prefer a quick closing, buyers can request more time if needed, aligning the closing with their own schedule or the sale of a current home. This flexibility can make the moving process much smoother and less stressful. Lastly, buyers can also negotiate for personal property such as appliances or furniture to be included in the sale. This can save them the cost of purchasing new items and add extra value to the transaction. Understanding that so much is negotiable in a real estate offer allows buyers to secure better terms and tailor their deal to their advantage, saving money and ensuring that the home purchase meets their needs and expectations. And the final thing you must know is that an inspection is an important part of the home buying process and shouldn't be waived. Here's why. Waiving a home inspection is a decision that should not be taken lightly, as it involves a significant investment and potential risks. A home inspection provides you with valuable insights into the condition of the property, helping you identify any underlying issues that may not be visible to the naked eye. These issues could range from minor repairs to major structural defects, which could end up costing you a significant amount of money down the line if left unchecked. By having a professional inspect the property, you gain peace of mind knowing that you are making an informed decision about your investment. Additionally, the inspection report can be used as a negotiating tool to request repairs or a price reduction from the seller, ultimately saving you money in the long run. Ultimately, waiving a home inspection may seem like a way to expedite the purchasing process and save you money, but it can leave you vulnerable to unforeseen problems. It's always wise to prioritize due diligence and have a thorough inspection conducted before finalizing any real estate transaction. So there you have it, 8 things you must know before buying a house. If this video was helpful to you, please subscribe and share. Have a good day.